Hello, I'm Noel Lim on ASEAN Speaks by Maybank. Malaysia's upcoming general elections is the most exciting, with significant multi-cornered fights and a 40% jump in the number of registered voters. Meanwhile, Singapore avoided a technical recession, but inflation risk remains elevated and another round of tightening is expected. Head of Fixed Income Research, Phoon, discusses with our analysts on the road ahead.
Hi, good morning everyone. It's 8 o'clock on Monday. A quick recap for last week. Global equities declined as US core inflation increased by more than forecast to a 40-year high in September. Adding to the concern is the University of Michigan survey, which showed that inflation expectations for the next 1 year and for the long term also increased, probably pressuring the Fed Reserve to hike rate more aggressively to curb price pressures. The S&P 500 fell 1.6%, Nasdaq down 3%, Euro Stoxx 50 almost flat. Hang Seng Index plunged the most by 6.5%, and ASEAN equity markets were down by between 1% and 3%. Market pricing on the terminal Fed funds rate has now increased to 5%. The US Treasury curve bear flattened, waved by the sharp sell-off in UK gilts last Friday, because the Bank of England confirmed that it will end its temporary bond buying program. The 2-year US yield increased to 4.5%, and the 10-year US yield increased to 4%. Crude oil futures weakened. West Texas Intermediate dropped below $86 a barrel. On FX, the dollar extended its gain. Japanese yen weakened by an additional 2.4% versus the dollar to about 149. Japan Finance Minister issued a statement and expressed concern about high volatility and one-sided movement in yen, because disorderly FX market can have adverse implications for the economy and also financial stability. ASEAN FX all weakened versus the dollar, except for Sing dollar, which strengthened following the MS recentering of the senior ban. On UK, Prime Minister Liz Truss fired Kwasi Kwarteng as UK Chancellor, replacing him with Jeremy Hunt, and made a dramatic U-turn on her tax plan in an attempt to repair the damages in market confidence. According to Oddschecker, there's a 40 to 50% probability that she will leave her job as UK Prime Minister by the end of 2022. Bank of England Governor Bailey, speaking at the IMF event in Washington, warned that a tight labor market may make inflation more persistent. On China, the 5-yearly Party Congress started on Sunday and will last for about 1 week until the 22nd of October. In his opening speech, which lasted for about 2 hours, President Xi defended the dynamic COVID-0 policy. And in addition to President Xi's reappointment as party leader for a third term, the market will also watch for new leadership lineup in the party, which typically is released after the conclusion of the party meeting. For Malaysia, similarly, the political temperature heats up because Parliament was dissolved to open door for GE15. The Election Commission will meet this Thursday to decide on the polling date. Meanwhile, the dollar-ringgit spot crossed the 470, reaching another new high, and it is not far from the all-time record of 4.77 in 1998. Looking ahead this week, we have China's third quarter GDP on Tuesday, Bank Indonesia rate decision on Thursday, and also Japan will release a CPI report on Friday. And this morning, we have Suhaimi, Chew Hann, and Shao Yang to comment on GE15, Harbin on Singapore MS policy, Anand on ASEAN equities, Chee Ting on plantation, and Daphne on Philippines sugar sector. And let's start with Suhaimi for GE15. Suhaimi, you wrote a report on Malaysia politics heading to the elections. What are the key things should we watch out for, and what is your expectation on potential scenario for the results, and how will they affect government policy such as the fiscal policy, tax, and also government spending?
Good morning, everyone. The report is basically a collaborative effort by Malaysia research team. So from the report, we highlighted several things to watch that could affect GE15 outcome. First is this election likely see a lot of multi-corner contests as opposed to the straight fight between BN and PH in GE14. Secondly, voters turnout and election results may also be influenced by the big increase in new voters following the lowering of the eligible age of voting to 18 now from 21 previously, as well as the automatic voters registration. So I think since GE14 up to latest available numbers, the numbers of registered voters have shot up by over 40%. There is also better access to voting in GE15 as this election will see polling hours extended by 1 hour. And additionally, all Malaysians living abroad, aged 18 and above, are now able to enroll themselves for postal voting as soon as registrations open. In terms of outcome, we listed 4 plausible results. One scenario is you have UMNO-led BNs winning the most numbers of the 222 parliamentary seats, but still short of a simple majority of 112, perhaps necessitating it to team up with Sarawak's GPS and PAS, and possibly Bersatu-led BN if Bersatu is able to win some parliamentary seats to form a simple majority government. Another scenario is UMNO-led BN together with Sarawak GPS secure better than simple majority, mainly at the expense of PAS and Bersatu, and potentially winning some PH seats under PKR and Amanah and DAP in the case of Sarawak's parliament seats. Third scenario is Anwar-led PH on its own or in some form of bigger opposition alliance wins a simple majority, or potentially strong, formidable, convincing majority. The last scenario is what we call uncharted waters, with a totally new rather than a tried and tested coalition government. So we should not rule out the potential scenario of the previously and even currently unthinkable alliance within the likes of UMNO, DAP and PKR, for example. But the other possibility is a minority government due to hung parliament outcome or a stalemate among parties in forming a coalition government with a simple majority. From a macroeconomic policy perspective, we see some perhaps common grounds in terms of government's key policy agendas. We expect any government form after GE15 to maintain or remain committed to fiscal consolidation, although the tax policies could be very well different depending on the outcome. For example, under scenario of a PN-led government, goods and services tax or GST can be expected to make a comeback to broaden and diversify income sources for sustainable government revenue and reduce the reliance on the volatile commodity-related taxes or revenues, especially the oil and gas-related incomes and Petronas dividend, as well as those one-off revenue sources like Cukai Makmur and a special voluntary disclosure program. However, GST may not materialize under scenario of a PH-led government because PH scrapped GST after winning GE14 in 2018, and their statement recently also opposed the return of GST. Instead, a PH government's tax policy may well be that of taxing wealth and profits by, for example, expanding or broadening capital gains tax and windfall profit tax beyond the existing real property gains tax and the windfall profit levy on plantations. In terms of government expenditure, we think populist measures, especially cash handouts program for the lower income group will continue, but we also expect assistance to become more targeted as per the subsidy restructuring to a more targeted mechanism and the optimization of the various social safety net and welfare programs. We will also be on the lookout for stronger reforms in government procurement with more open tender and check and balance to be implemented, as well as introducing Government Procurement Act. Secondly, major infrastructure projects should continue. Projects that are now under construction, like East Coast Rail Link, Gemas JB electrified double track, JB Singapore Rail Transit Link, Pen Borneo Highway, and as well as for projects where tenders have started, like MRT3. In fact, we think a strong win by UMNO BN could see revival of Singapore Kuala Lumpur high-speed rail project and the related Bandar Malaysia development, with possible extension of the high-speed rail track to the northern international borders of the peninsula. I think we can expect the next government to narrow the interstate gaps on socio-economic, human capital and infrastructure developments through higher share of government development allocations to the less developed states for basic infrastructure, as well as focusing on improving quality and delivery of essential public services like education and healthcare. Last but not least, I think with sustainability being the buzzwords these days, any government form after GE15 will no doubt make sustainability a key policy agenda.
Government policy aside, how about monetary policy? Do you think an early election will change BNN MPC meeting decision in November?
On BNM monetary policy, our view remains PR will reach 3% early next year. So after 3 successive OPR hikes of 25 basis points, each in May, July, and September, totaling 75 basis points, that raised OPR from record low of 1.75% to 2.5% currently. We'll see another 25 basis point hike at the MPC meeting on 2nd, 3rd November, followed by another 25 basis point increase early next year.
Thanks, Suhaimi. On the same topic, we'll loop in Chew Han and Shao Yang on Malaysia equity. Chew Han, continuing with what was shared by Suhaimi, how the equity market has performed so far after the announcement of GE15, and what is your expectation going to the polling date? Any differentiation by sector?
Yeah, okay. Hi, thanks, and good morning, everyone. Now, last week, the market was actually weak. It was down 1%. That moving forward, I think leading to polling date, which could be about 5 or 6 weeks from now, we do expect the market to be cautious buyers, to trade with a cautious buyers. I think if you look at valuations, the KLCI is now, after last week's selling, the KLCI is now trading very close to -2 standard deviation below mean already. So this actually is signal that the market is actually very much oversold. But having said that, we do think that foreign investors, they have also been selling last week. We do think that the foreign selling could actually persist for a while leading to polling date. That's also because of the highly uncertain outcome of the GE15 the GE15. Now, in terms of the sector, we actually look at the sectors under the 4 scenarios that Suhaimi has highlighted. That is post GE or after the GE. Now, in all the scenarios, we do, and for most of the sectors, we don't think that they will be impacted. Existing issues need to be addressed by the new government. It needs to be continued to be addressed. Now, having said that, for the construction sector, although we think that the projects under construction and those that have tendered will not be impacted regardless of scenario 1, 2, 3, or 4. We do think that the timeline, in the award timeline for projects under tender could take a while longer under scenario 4. Now, for construction sector also under scenario 1 and 2, we do think that there could be more development allocation from the federal government to Sabah and Sarawak. Now, similarly, for the automotive and the renewable sectors, we think that regardless of scenario 1, 2, 3, and 4, policies will remain. For example, electric vehicle related policies will remain for the automotive sector, whereas for renewable, the capacity that will be awarded, new capacity or quota for RE will continue to be given out regardless of scenario 1, 2, 3, and 4. Now, as for the other sectors, the bigger sectors like banks, we do think that banking operations are unlikely to be disrupted regardless of scenario 1, 2, and 3, and 4. For consumer, as we have, Suhaimi has highlighted, consumer-friendly measures are expected to continue regardless of scenario 1, 2, 3, and 4, especially cash handouts and a financial assistance program. And here we actually maintain our positive call on the sector with quite a number of buys. For sectors which are apolitical are the glove sectors, all right, healthcare. That also goes for petrochemical, plantation, the technology sector. We do think that regardless of what's the outcome of GE15, we don't think that they will be severely impacted. Now, for the telco sector, under scenario 1 and 2, we expect the regulator to continue focusing on shoring up Malaysia's digital infrastructure. All right, under scenario 3 or even 4 could potentially result in Malaysia's 5G deployment model coming under review again. Under scenario 3, in particular, there is also the possibility of the government seeking higher spectrum fees. Now, for the utility sector, in relation to electricity tariff surcharges, we do expect the new government to continue subsidizing regardless of scenario 1, 2, 3, or 4. And scenario 3, that means a PH led victory, could see the reintroduction of various market liberalization measures for the retail segment, in particular for the power sector. Now, if you recall, under the PH government, they were a keen advocate of market reforms. For the gas industry being already liberalized, we do expect operations of the gas utilities to remain stable regardless of scenario 1, 2, 3, and 4. And lastly, there are some decisions which are pending right now, and that includes that of a tariff hike, water tariff hike in Johor. We think that the conclusion of a GE15 may eventually see a water tariff going up in Johor, and this would actually be positive for one of the listed stock there, which has been waiting for this hike for, I think, since the last 3-4 years. We make no change to our sector calls as well as our stock calls following the dissolution of Parliament.
Okay, thanks, Chew Han. Shao Yang, Malaysia aviation. To what extent you think the GE15 will help on flight traffic? Do you see this as a major catalyst to the sector?
Hi, Winson. Good morning. So what we have seen in the past is that passenger traffic tends to rise as voters return to voting constituencies to vote. This is especially true for voters who come from Sabah and Sarawak. I mean, the only way for them to go home in a reasonable amount of time is basically to fly only. So what we have observed in detail is that during 2018, MAHB's passenger traffic grew 80%, while capital ASEAN, Malaysia, AirAsia's passenger traffic grew 11%. During GE14, Malaysia Airports' passenger traffic grew 3%, while capital A's Malaysia AirAsia's passenger traffic grew a similar 11%. Now, the good thing about this is that it appears that the passenger traffic grows structurally, meaning passenger traffic does not ease post GEs, but stabilizes or continues growing. And what we also saw is that there was a short-term impact on fares. So fares were up for a while before easing after the elections. So we hope that these observations that we made during GE14 will also during GE15. That being said, we think it could be a little more, it could be a little less potent than GE13 and GE14. For one, we don't expect voter turnout to be as high. because at press time, six of the states in Malaysia have chosen not to. At least six of the states have chosen not to dissolve the state assemblies, so voters are not so likely to return to vote when voting for the parliamentary election. They don't go for the state assemblies, and fares are right now very high. So that they would dissuade some from going back to their voting consistency vote. That being said, we're still expecting a positive impact on the aviation sector. So this is an event that can't possibly be bad for the aviation sector. So we remain positive on the Malaysian aviation sector. We buy calls on MAHB and Capital A.
Okay, thanks, Shao Yang. We'll move to Habin on Singapore. Habin, Singapore released its third quarter GDP last week and also updated the inflation outlook. Can you share the key takeaways?
Hey, hi, morning. Yeah, so the MAS on Friday tightened for the fifth time since October last year, this time by just recentering the Sing near to the prevailing level. The slope and width of the band was kept unchanged. We estimate that recentering is about 2% above the previous midpoint. On the inflation side, I think that's the part that the MAS is now clearly very worried about. I think previously the guidance was more about inflation peaking in the fourth quarter, but now the MAS expects core inflation to remain elevated with upside risk over the next few quarters, even amid a below-trend GDP growth next year. So it expects the policy move to build on past tightening moves. As a result, we think that April next year, we could see another 6 round of tightening, even though growth could be weaker. Their new inflation forecast, they're looking now for core to be around 4%. That's the top end of their previous range, 6% for headline, also at the top end of the previous range. And their forecast for next year is still pretty high. For core, it's 3.5 to 4.5, basically expecting core to persist roughly where it is today, and 5.5 to 6.5. And MS warned of upside risk from its forecast from the fresh commodity global price shocks and second round effects from prolonged elevated inflation. On the GDP growth, it came in above our expectations, 4.4%. We were looking for 2.2 and possibly a technical recession. So the MS avoided a technical recession. We're a bit surprised that they used a flash estimate of manufacturing of 1.5%, which implies that electronics and manufacturing probably rebounded in September. We'll get those figures in 2 weeks' time, but we are waiting before we probably revise our GDP growth forecast, simply because this runs contrary to the PMI for manufacturing and PMI electronics, which have both slipped in. And we think that contraction will persist into the fourth quarter. The pleasant surprise was really on the services side, especially that related to the reopening. Combination of food services, real estate, admin support services, and other services, cumulative together grew 9.2%. So that really helped lift growth.
Do you expect MS to tighten again in April?
Yeah, given the very elevated inflation forecast that they have guided for, we are expecting the MAS to tighten again in April, probably via another recentering.
Thanks, Habin. We'll move to Anand on ASEAN equities. Anand, can you share the key developments or any update to our calls? Also, what I find interesting is Indonesia equity market so far is an outperformer. I think your recommendation is to reduce equity exposure in the market. Can you share the rationale, and also what is your take on Vietnam stock market after the sharp sell-off in recent weeks?
Sure. Hi, guys. So I think the recommendation on Indonesia in particular, this has been a pretty recent recommendation to start taking some money off the table. As you can see from figure 2 here in our ASEAN Plus publication on Friday, Indonesia remains an anomaly, a positive anomaly in the sense that it is the only ASEAN and Asian market to be showing an absolute upside year to date in local currency terms. And even in US dollar terms, it is the best performing market, even though on that benchmark, it's down about 3% year to date. So, the market's been doing very well. And it has also been attracting a lot of foreign inflows. You can see from figure 4 here, the brown bar. It is the biggest recipient of foreign inflows into the equity market in ASEAN. So a lot of good news is already baked in. I think that the market recognizes the proximity to the commodities trade for Indonesia, also the domestic demand advantage it has as a lot of trading partners for the region start to enter a sharp slowdown in growth and hence trade prospects. So it feels a bit defensive from that perspective as well. So I think, a lot has been baked into the price at this point in time. And we're saying, there are some road bumps up ahead. A big one is the fact that Indonesia has raised fuel prices by 30% a month ago. And that's going to have an inflationary impact into 2023, and that's going to pressure margins and demand. So we are seeing some potential downside to our earnings forecast. And the other issue is, Indonesia generally doesn't do well when there's a sharp tightening in global financial conditions because its capital market is fairly underdeveloped compared to a lot of its neighbors like Singapore and Malaysia. So, moves can be very volatile. So for those two, from those two perspectives, we think take some money off the table now and wait for pullbacks to accumulate again.
Thanks, Anand. We'll move to Chee Ting. On plantation, crude palm oil prices seems to have stabilized at around 3,500, 4,000 per ton recently. What is your outlook on the sector?
Morning, Winson. Yeah, cocoa prices are indeed stabilizing and trading around 3,500, 4,000 of late. Downside from here, presently buffered by the low CPO price itself, which CPO price is currently trading more than $500 per ton discount to whether it's US oil, Argentina oil, or even German rapeseed oil. On the other hand, the upside is capped by the high inventory of palm oil region. Just last week, Malaysia Palm Oil Board announced its September stockpile to hit a 35-month high at 2.32 million tons, which was 11% higher compared to a month ago and 32% higher than a year ago. Although this was a seasonal build-up in inventory as output is typically strongest during this time of the year, the market remains concerned that October stockpiles will go even higher if the pace on exports do not pick up. Exports of palm oil from Malaysia is facing stiff competition from Indonesia, which has excess inventory build-up caused by the export ban and restriction imposed in the first half of this year. Given that there's no reliable stockpile data from Indonesia, despite it being the largest producer and exporter of palm oil in the world, the market continues to use Malaysia's NPOB data as a proxy for price discovery. Hence, given the present expectation of a further build-up in NPOB inventory for the month of October, we think CPO price will continue to trade sideways in the short term. The wider than historical average price gaps between CPO and other vegetable oils are justified for now, given the large palm oil stockpile and a peak output cycle. The huge price gap is needed to boost the demand of palm oil and flush out the bloated inventory in Indonesia during this season. Just last week, the Australia Bureau of Meteorology reiterated its view that La Nina is likely to persist into the early part of 2023, and the negative Indian Ocean dipole event will continue until the end of this year. The combination of La Nina and negative IOD are likely to bring above average rainfall to Malaysia across this region. This prompted the Malaysian Met Department to warn of possible flood risk for parts of Malaysia in November and December this year, which in turn may disrupt palm oil supply and be supportive of CPO price. And across the globe, La Nina could also impact South Americans' ongoing planting and eventual harvest in the first quarter of next year. And the market is presently anticipating a large harvest from South America on the assumption of a normalized weather. So if I can summarize what I said earlier, is this CPO price will continue to trade sideways for now. We believe CPO price should recover somewhat by year end due to the wet weather risk, and as the market looks forward to first quarters of 2023's anticipated seasonal low output cycle.
Okay, thanks, Chee Ting. We'll move to Daphne on Philippines sugar sector. You wrote a report where the high sugar prices has stirred debate on whether to raise more imports to make domestic sugar prices competitive. How important is the sugar industry to Philippines' economy, and do you think import is the right solution?
Well, the Philippines produced $850 million worth of sugarcane in 2020, making sugarcane the fifth largest crop in the country in terms of value, behind rice, bananas, corn, and coconut. So the Sugar Regulatory Administration estimates that sugarcane is planted across 398,000 hectares of land in the Philippines and providing income to 500,000 workers. And as of the end of last year, there were 25 millers and 12 refineries nationwide, largely concentrated in the Visayas region, which produces 65% of the country's sugar output. However, the local sugar industry is weighed down by a lack of productivity and low competitiveness, attributed to the lack of economies of scale and a restrictive Kitan system. So as early as June of this year, the SRA has already flagged a 16% year-on-year decline in the September 2021 to August 2022 milling season output, with sugar production down to 1.8 million metric ton and is insufficient to meet the country's 2.5 million metric ton consumption. So as such, retail prices for refined sugar in Metro Manila wet market surged to 100 pesos per kilo, or up 85% year-on-year by mid of August. So the sudden spike in sugar prices, if not immediately addressed, could further exacerbate the country's already worrying inflation levels.
Okay, thanks Daphne, and thanks everyone for joining the call. Have a good week.
Check in with your trading rep and download our research reports and market insights in the Maybank Trade app. I'm Noel Lim on ASEAN Speaks by Maybank.